Cameco has been one of the hottest stocks to own on the TSX this year. It's up an impressive 63% thus far. But given its red hot rally and the stock now trading at an all-time high, has it become too late to invest in the business? Here's what you need to know. Cameco is one of the leading uranium producers in the world, and its production increased by 22% last year. So if you're bullish on nuclear energy and uranium, Cameco is a stock that will likely be on your radar, and that's evident through its massive gains this year. The demand for energy is rising, particularly as the needs for AI data centers grow. Nuclear energy produces virtually no greenhouse gases, and many people see it as a clean energy source and solution. There are, however, risks, including large amounts of radioactive waste. And when there are accidents, they can be catastrophic. 3 Mile Island, Chernobyl, and Fukushima are high-profile accidents and meltdowns which highlight one of the biggest vulnerabilities with nuclear energy. While right now the market has been bullish on nuclear energy, it's by no means a surefire solution to the world's energy problems, as it comes with significant risks. Another factor to consider circles back to AI demand. Right now, AI is using up significant resources, and significant needs for energy are a big issue. But if in the future AI becomes more efficient and potentially uses less energy, future energy needs may not end up being as significant as they may appear to be right now. Investors and analysts may be overestimating long-term demand. So there are a couple bearish reasons to be considered before jumping in on the uranium and nuclear energy bandwagon. Uranium prices have been skyrocketing in recent years, from less than $34 at the beginning of 2021 to as much as $100 in early 2024. The spot price has risen sharply. Currently, it sits around $75, but the trend has been decidedly strong in recent years. And where the spot rate goes from here on out will undoubtedly play a big role in where Cameco's stock goes as well. For now, business is good. The company's revenue last quarter rose by 47%, and its earnings soared to $321 million due to a strong performance in its uranium and fuel services segments, plus earnings from its investment in Westinghouse, which Cameco took a 49% stake in a couple of years ago, partnering with Brookfield Asset Management. Westinghouse is a leading nuclear services business in a move that helps diversify Cameco's operations. Overall, it's been great news for the stock, which now has a market cap of around $52 billion Canadian. That valuation has pushed its price-to-earnings multiple to nearly 100. However, its forward PE multiple is a bit lower at less than 60, and that's based on how analysts think the business will perform over the coming year. However, a forward PE of 60 is still fairly high, and the danger is that it leaves virtually no margin of safety for the stock, making it vulnerable to a correction. If you look at analyst estimates, the consensus price target suggests that Cameco's stock may not have much more room to rise higher. This is based on the USD price, but you can see the upside shows just 3%. That doesn't mean it can't go higher, of course, but it's an indication of just how much bullishness there's been behind the stock of late. As for the stock's technicals, they still look strong, with the 20-day moving average being higher than the 50-day moving average, which is higher than the 200-day moving average. There's no sign that is due for a drop in value just yet. And its RSI is at around 65. It has been overbought in the past, but overall, that hasn't slowed down its trajectory this year. The big story for energy stocks has been the enormous demand coming as a result of AI data centers and just overall AI-related investments. Tech companies are spending heavily on AI, which is highlighting the significant need for energy stocks such as Cameco. If you need any further proof of that, just look at the movement of Cameco's stock in relation to Nvidia's over the past year. Their movements have been highly correlated. While this may be good news if you're bullish on AI stocks, it also means that Cameco may be vulnerable to a crash if the AI bubble does indeed pop. So, is Cameco still an attractive buy at its current level? I'm inclined to say no. It's closely tied to the AI hype, plus it is vulnerable to fluctuating uranium prices, and its valuation is already sky high. There's just too much risk and room for the stock to fall for it to be a safe buy at this stage. Nuclear energy is a long-term play, but it's moving based on short-term trends, which I'm not sure will hold up over the long haul. All it takes is another bad nuclear disaster for people to remember why there hasn't been huge demand for nuclear reactors in the past. Cameco is a top player in the industry, but it's not worth buying it at these levels. What do you think about the stock? Let me know in the comments. And if you've made it this far, please make sure to leave a like and subscribe for more videos. Thanks for watching.